Thanks. Welcome to all our viewers and listeners out there. This is Greg Heym's Crossing the Line, brought to you by Greg Heym and Ray and Lena. Ray, if he didn't clap, I don't know what we do around here. We need some boost of energy every now and then. And this week we're joined by Lisa Rae Castrigno, who's had the privilege of working with me or for me for a quarter century now.
Yes.
That sounds old, right? It sounds older than 25 years.
This is why I have the gray hair.
Sure, let's go with that.
Yes, it's 25 years of you.
I would have more gray hair
me gray.
if I had more hair, but I don't.
Well, at least I have plenty, so that's.
Enjoy it now.
Yeah.
Take the wins when you can get them.
I do.
And speaking of wins, the Jets did not win yesterday. Although I have to say they played 3 quarters of terrible football.
And 1 quarter of really good.
And then Will McDonald did something I've never seen before. Literally jump over an offensive line.
Oh, I know.
Without touching them. You're not allowed to touch them.
No, I know. But why can't you? See, I wasn't sure why
there's
when
rules
they said,
about that.
Okay.
You know. And there's rules about leverage, like you can't push off on someone. So he goes all Marvel superhero.
I know, he jumped over everybody. But when the commentators were saying he's not allowed to touch him, I couldn't understand.
Yeah, because they don't want people engaging and someone runs up the back. And
that was unbelievable.
If you can do what he did, it's like when Josh Allen jumps over people. It's like nothing. These guys are superheroes.
Jumps over them. He's just a tank. He rolls through everybody.
Well, he's a tall guy, but at least they made it interesting. They
tried.
But it was, that was the most disgusting first quarter football I've ever seen. The amount of penalties, and Tampa Bay had most of them. It was just awful. But my Yankees getting it done. Your Mets done, over.
We're not done and over. It's not over yet.
No, with
We're
all
tied.
the polar bears and squirrels you got on that team, and so all done.
Sorry,
Lucy.
Lucy,
I know you're watching this episode.
You.
She knows where to find me. She should come after the Mets, not me. I'm not the one who stinks. It's their team.
Well, she says she's coming back next life as a manager to try to fix this
or
make it right.
A more realistic dream is just become a Yankee fan. You just gotta say, I'm a Yankee fan now.
No.
All right.
You can't go from the Brooklyn Dodgers to New York Yankees. It just doesn't work that way. Don't you understand? No one ever told you these things?
Is better than the Mets.
Okay. Well.
All right. Well, before we get on to the economics, we are here at beautiful Studio 1873, which should be renamed the Greg Heym Studios, don't you think? Yes.
Sure.
I think so.
Absolutely.
Or we name it after the bobbleheads or something like that. But we're going to get started with the show right after these messages.
What do you really need to know about buying or selling a home? First, it's serious business. And it's complicated. There's a lot of money on the table, and emotion too. You need an agent who knows the ropes. So, whether you're buying or selling your home, work with professionals who have a mastery of the craft.
Sedgh and Zuckerman is a boutique residential law firm guiding you and your clients every step of the way with a solution-oriented approach. Make sure to work with a deal maker and not a deal breaker. Contact us today at sznylaw.com.
This beautiful set here at Studio 1873 is brought to you by the Everset. The Everset provides full-service staging and furniture rental solutions in the New York area. For more information, please visit us at staging.theeverset.com or email us at staging@theeverset.com to request a free proposal.
All right, and we're back. And, there were a couple of stories last week, but what was the big one that everybody was waiting for?
Well, the one everybody was waiting for, the Fed, and what the Fed was going to do. And the Fed did what everybody expected they were going to do.
Yeah, I always say, a move that surprised nobody.
Yeah, it surprised nobody.
There was a question if they might go a little bigger than 25 basis points.
Well, I think that was the question, was what they knew the cut was coming. That was like a guarantee, but whether
markets had it like 96%
at a 25%, so they got what they were expecting.
So just a little bit of background here for those of you that are economists can fast forward a little bit, because there's a lot of misconceptions about what rate the Fed actually lowered and what does that mean for the economy and lending rates and mortgage rates. So we'll talk about that now because I think it's important.
Oh, yeah.
So the rate they cut is the federal funds rate. Now, what that is a rate banks charge each other for overnight loans. Let's say the Bank of Lisa Rae
Yay.
has some extra cash, or as Sebastian Maniscalco calls it, cash.
Cash.
I need cash because I have reserve requirements. I need to have a certain amount of money. So we make a deal. I pay you back the next morning, and you've utilized your money because you got a return on it. Idle cash, nobody wants, right? This isn't really done anymore. After the Lehman Brothers and the financial crisis, now banks are paid interest on their reserves. So it's not like you say, well, we can't have this money sitting around. We got to put it to use, lend it to somebody. No, you can just let it sit there and the Fed will pay you interest. So it doesn't really even have that. People used to get paid just to sit at desks and trade Fed funds. Now it doesn't happen anymore. Right. What it really is the gas pedal or the brake on the economy. Now, when you see a weakening in the economy, which we've certainly seen in the labor market recently.
For sure.
Then you have to look to how can we stimulate the economy. We'll flood it with money. It's like, let's just step on the gas, and they'll actually go out and they'll buy their treasury bonds and bills back and give whoever holds some cash. And hopefully they hire people, they spend the money, get the economy going. They do the reverse when they're trying to slow things down, as they were a couple of years ago, after they let inflation go runaway by saying, it's transitory, it's transitory. Right. They only read the blog. We didn't have the podcast back then. Maybe it's our fault. We should have thought these guys are going to need some help. Let's, if they're not going to read the blog, maybe they'll watch the podcast. Right.
So you could jump in there with that assistance for them? Something like that,
yeah. Okay. So that basically certain rates will change either, in partial of what they do. Like just because they cut rates 0.25%, that doesn't mean every rate just went down 0.25%. Prime rate will go down 0.25%. That's what banks charge to their best customers. Yeah. But other kind of rates do not. And we're going to get into that in a little bit. Just some other interesting information, because that's what we're all about. I got the three wise men in front of me here, Ron Guidry, Alfred E. Newman, and the man, Rick Pitino, is going to lead St. John's to their first national championship this year. Okay. So they haven't touched rates since December. So it's been almost a year. Yeah, that's important to remember, Lisa Rae. Remember that.
Okay.
Lena Rae, remember that, because we're going to talk about that later. Only one of the governors voted for a 0.5% reduction. They also released their quarterly economic projections. This kind of gives us two things: where they think the economy is going, and something called a dot plot, where they survey. It's like Family Feud. Remember you watch that when you're a kid? When Richard Dawson wasn't kissing every female contestant on the show. Yes. Survey says. And basically, on those responses, they expect to have 2 more 0.25%. I know a lot of people, sometimes when I speak at meetings, people raise their hand like, what's a basis point? So we'll
it's a good question.
No, it's basically 1/100%. So we'll say 0.25%, because 25 basis points is a quarter. So 2 of those cuts this year. They have meetings in October and December, and then 1 more next year. When that will be, who knows, maybe the beginning of the year. Remember, they don't have to stick to this. They could change their minds tomorrow.
Well, I think, didn't he say in his statement, Powell, that it's going to be based on...
It's data dependent.
Right.
We're data dependent. But when the data shows inflation at a 40-year high, we'll just ignore that. But yeah, sure.
Well, that data, yes, it was.
All he says is data dependent and tariff these days,
and then they ignored the data. But just saying is that
what was interesting was, their statement, they mentioned that job gains had slowed and uncertainty about the economic outlook remains elevated. Again, that's that Fed speak. We're not adding enough jobs and we're more worried about the future. See, that would have been a better way to say that.
Well, a little more layman's terms.
They actually upped their forecast for economic growth this year. You would have thought after saying that, you'd have done the reverse, but they're only predicting 1.6% annual GDP rate of growth. That's not great. It's only up from 1.4% in their June projections. All the other forecasts for this year were kind of the same as they were. So they have this statement. A lot of outlets will show you with red line what was changed because they're that lazy. Like it's like me taking a report and just crossing out the numbers and putting the right numbers down. It's like we're just always going to have the same thing. So then he has a press conference, right? And things are going good. People digging it. Like stocks are going up. We're like, fine. But then he starts talking too much. And, the subject came up, are you just doing this as insurance or whatever? And the chairman referred to the cut as, quote, risk management. Then you could just hear the elevator going down on stock prices because that's not what they wanted to hear. I think everybody knew it, right?
But you don't necessarily have to say it. Right,
because they want to hear, oh, we love cutting rates. We can't do enough of that. That's what the stock market wants to hear.
Pretty much.
We're going to cut them in our sleep. We'll just cut them. Let's just cut them again while I'm here now. Let's just do it then. So they didn't like that very much, but they got over it.
Yes, quickly.
Yeah, they did. Stocks finished the week okay. We'll get into that in the second half of the program.
Yes.
If we have enough material, I think we'll get there. So, again, let's start what this means. When the Fed cuts the federal funds rate, typically you would expect short-term or variable loans to come down, not on the exact proportion. Like your credit card rate is not 0.25% lower than it was a year ago. And just remember that last year, almost exactly a year ago, the Fed started 3 rate cuts totaling 1%.
Yeah.
Did credit card rates go down by 1%?
No.
No, they did not. In fact, I remember seeing a study at the time that said more than half of the credit card companies hadn't changed their rates. And remember, too, your rate is also based on your credit score, which goes up and down.
Yes.
So, with auto loans, again, any short-term loan, a couple of years, you would expect to see a little bit of a reduction, but don't hold your breath waiting for everything to get significantly more important, the rates get lower than they've been recently, because it just doesn't work that way. I think that people think this is the greatest news ever because the stock market loves it.
They still think there's that
right?
direct correlation of one to the other, that if one is coming down, it has to mean that the mortgage rates will come down.
And Wall Street loves it because cheap money is cheap money, right?
Money's cheap money.
Money is good. Cheap money is
even better.
Yeah, that's we all want cheap money.
Yes, we do.
Unfortunately, we don't have any on this show, but maybe somebody else does. All right, so what does this mean for mortgage rates? I could say absolutely nothing, but that's actually not true. But, the Fed actions with the federal funds rate do not directly impact mortgage rates. A lot of people keep saying to me, Greg, stop playing with the bobbleheads and tell us when the Fed's going to lower mortgage rates. And I said the Fed has no control over mortgage rates. But, it can influence certain markets. And none of this is a secret. Like, we don't expect like a huge movement in the bond markets because a lot of this is priced in. They knew it was coming after the horrific jobs numbers that we had gotten. And then 911,000 jobs are gone with the wind, so to speak. In that environment, everybody knew this was coming. There was a lot of pressure being put on the Fed from a variety of different sources. So, but perfect example of why the opposite can happen. So if the Fed cuts rates, you would expect, okay, economic growth should pick up. Money's cheaper. Companies will borrow. People will borrow more. That'll get the economy going. We'll be all happy, right? But remember that if you expect an improving economy, you might also expect higher inflation down the road.
I was just going to say that, the 1.6 sounds bad, but don't we want it to be a little slower because inflation has been so sticky?
Well, that is certainly part of it. And I think that, the job market is going to keep inflation at bay because if we're not hiring the way we were before, you're going to see wages flatten out a bit. And that's what's going to take care of, I think.
Is going to help finally kind of break it.
Kind of get us in the red zone, get out of the red zone and in the end zone in the fight against inflation.
Right.
See, the Jets are never in the red zone, so some people may not know what that means. That's inside the 20 in football. That's the hardest 20 yards to get. The other 80, pretty easy.
It seemed to just flow.
It's just the field's smaller. You got less to play with.
Yeah,
so
less room.
Last year, and starting in September, we got the 1% of rate cuts. When the Fed started cutting rates last year, they were at 6.09%, lower than today,
Yeah.
Next couple of months, it went up to over 7% while the Fed was cutting rates. So there can be this inverse thing. Again, you're cutting rates, the economy is expected to improve. That might mean wages go up, more hiring, which means more demand for stuff, which could mean more inflation. It's, at the end of the day, it's the 10-year Treasury that really drives the 30-year mortgage rate, right? So, and that's really based on the people that buy the bonds, because you have a price. The higher the price of the bond, the lower the interest rate. This is inverse relationship. Because if I buy it for $999 on a $1,000 bond, I'm not getting a very high rate of interest, probably because it's a very secure investment.
Right.
But the less I pay for it, the higher the rate. So, these investors that buy these bonds are looking at a couple of things when they buy. What's the current state of the economy? What's the outlook for inflation? How much government debt is there? Because remember, this is the federal government borrowing money, as
to finance that.
As sort of de facto lenders. By buying the bonds, investors are going to say, wait a minute, what about this? What about your budget deficit and stuff like that? So it's interesting. So right after the announcement, the 10-year Treasury fell below 4. It's like, yes, that's what we wanted, right? That's what they've been trying to do. But up every day since. So, remember, don't expect mortgage rates, which have been on a good run, hit an 11-month low, to continue falling just because of the Fed cut. Now, that being said, why is the Fed cutting? The economy's slowing. A slowing economy means less inflation. So it's the battle of, well, how quick do you think the economy is going to pick up with this rate cut? Is it just going to be like tomorrow everybody's going to go out and buy everything? No. So they have to balance that.
And that might not be a bad thing for everybody to go out and buy everything tomorrow.
Especially if you're buying me a gift. that would be good. And
Yeah,
Lisa's birthday's coming up in a couple weeks, so I'm not joking on that.
No.
So, it's going to cost me a lunch, but,
Okay.
if
But
you
it's
want,
a nice lunch.
Of course, our good friends at Canaletto will make a perfect lunch for us. We love that place. A plug to Canaletto, my favorite restaurant in Manhattan.
Yes. No, what I was starting to say is that you don't want, so devil's advocate, you want it to increase, but then if it increases, on the other hand, then you have other driving factors that can weigh it down. It's balanced. And so how do you find the right balance? That soft landing that everybody's been talking about.
That we haven't hit yet. It's funny, people like,
they're
great soft landing.
They're high-fiving
I know.
themselves, and they really they actually never really got there. And you notice how they stopped talking about the soft landing. It just kind of went
Well, there's a whole bunch of things
by
they
the
stopped
wayside.
talking
Right,
about.
but that's what I'm saying, is that they were talking about the soft landing, and then we're going to get there, and then all of a sudden they just stopped talking about
I
it.
did do a whole segment on super core inflation, because that was the number they were looking at. And then they
just stopped talking about it altogether.
It's like Paulie in The Godfather. You're not going to see that no more. Then nobody
Right.
talks about super core inflation.
No, and the thing is, we're talking today, but PCE comes out Friday, right?
Yes.
If I remember correctly, and it's been ticking up, like the numbers have
Well,
been ticking up.
yeah.
So what is that going to mean for how much we want to push the economy for the gas to go?
Right.
If that's been ticking slowly, but ticking, it's still ticking
Well,
in the
then
wrong direction.
This goes to, what can happen now. It's like, okay, so we got the rate cuts, and mortgage rates are at an 11-month low. They're ticking up a little bit, but that's okay. They're still higher than a year ago. People may forget how low they were when
Right.
it was just sitting a little bit above 6%. But one really worse than expected PCE report or CPI report, or if we start hiring gangbusters again,
Right.
the data dependent thing is, so much scrutiny is given to every bit of economic data that comes out. It's nice for us economists. Now we feel important. It's like, well, we have to explain to you what all this stuff means. You need us now. Before, you didn't want to know us. You thought we were boring and everything.
No, but it makes the Fed's decisions complicated, because if they're trying to worry about the job market and economic growth, at the same time they're trying to worry about bringing down inflation, they almost can run at counterpoints, where
Well,
when
look,
you're
if
pushing
they-
one, so you're making one better, and then this one goes worse. So
If they're conflicted about it, just call. But it's a good point you make. The Fed does have this dual mandate: price stability and maximum employment, which, as you see now, can be at odds with each other.
right now they
Because
are.
if you want to pick up hiring, that's has a potential to raise prices.
Right, as I say, to drive inflation in order to fix what you see as a weakening labor market. But then is it a bad thing if the labor market's weakening because it will bring down inflation finally?
Well, this is the thing for real estate. A lot of times you don't want to do it, but you might secretly be rooting for slower growth or a recession, because a recession will definitely get mortgage rates down.
Because it resets
and
things.
get home prices down. So, but we would never root for any of that. But, this dual mandate thing is right now they've made it clear that it's the employment side of things that they have to focus on. Inflation is sticky, whatever term you want to call, stuck in the red zone. It's not getting where it ticked up a little bit in the CPI reading, although
which wasn't
the producer prices went down, which is supposed to be the future.
Right.
And look, we said on the show a million times that tariffs will raise the prices of certain goods, but we're not talking about a widespread, level of inflation like we saw a couple of years ago. And, again, everything is going to be scrutinized under the world's biggest microscope, and we're going to read into it. Markets are going to, factor in things, they're going to price things in. And then that's when things go a little crazy, when they don't get what they want or they don't get what they expect.
Right, a little stock market tantrum.
They
temper tantrum.
Do you remember a couple of years ago we had a taper tantrum? So, and again, I can't do this on air, but if you look, last time the Fed touched mortgage rates, the federal funds rates was December 19th of last year. Right. Go look at a chart of mortgage rates from December 19 to now.
Right, they had
and
gone,
see they go up, they go down, they go up, they go down,
like a
they
little
go
roller coaster.
So just keep that in mind. And on that wonderful note, we're going to take a break, but we'll be right back.
Your dream home is closer than you think. I'm Scott Nadler, VP of Mortgage Lending at CrossCountry Mortgage, and I'm here to get you the perfect loan to match your perfect home. From first-time home buyers to seasoned homeowners, I've helped clients make their moves with confidence. Ready for a smooth, stress-free home buying experience? Let's get you moving today. Call me and let's turn those dreams into keys. Hi, I'm Evan Greenberg with Langdon Title. I specialize in title insurance across New York, helping real estate attorneys, agents, and brokers close with confidence. I solve problems fast and keep your deals moving. Contact me anytime.
Ultimate Diamond is New York City's most established family-owned jeweler. With over 65 years of experience, Ultimate is renowned for its exceptional, custom-crafted diamond jewelry, its bespoke engagement ring designs, and its ability to source rare, distinguished timepieces. Ultimate has built a legacy of timeless craftsmanship and discretion, making it a trusted name among those who value refined luxury. Learn more at ultimatediamond.com.
And we're back. Did I say that good? I love it.
Yes.
Okay.
Fabulous.
Well, thank you. We don't use the word fabulous enough on the show.
Oh, okay. Fabulous.
Actually, I don't think we've ever used it before. But all right, so we had this Fed announcement. Everybody's kind of happy. We also had good news on retail sales, which were
went up again.
Crushed expectations. Now, the one thing about retail sales to remember is that data is not adjusted for inflation. So the fact that it was triple what was expected, it was up 0.6%. But you could argue that 0.4% of that was the increase in prices that month. So, but that's still a good number.
But I was going to say it's still up.
I mean, we say all the time with the over $1 trillion in credit card debt.
And I was just going to bring that up, is that if people are in debt and they think that the rates are going to go down on what they're financing, now they're going to go spend more.
Of course.
Which drives economic growth, which is not necessarily a bad thing, but then can create, it's like this vicious cycle.
See, when you preferred Lisa Rae be your economics professor than whoever you had, I mean, it'd be better if I was, but you're good. You're doing your thing out there.
It's pretty good.
Thank you.
Well, right now, Lucy is yelling at the screen. She's better than you, Greg. Lucy is Lisa Rae's mother, who loves me. But says I don't give her daughter enough airtime, so I'm just going to sit back the rest of the show.
No, it's all you, because it's not crossing the line with Lisa Rae.
It could be.
It's crossing the line with Greg. See, it doesn't rhyme.
You could be in the show.
You need a new name because it doesn't rhyme at all.
Well, so many things have to come together to have a perfect podcast.
Yes.
You know, we haven't hit that.
And we start with you, and then everything else just blossoms out of that.
Well, you know, when
Was
you
that
have
good, guys? Said it, butter him up good.
when you have Greg Heym, you have Greg Heym. That's it.
What else
It's
do
the
you
only
need?
show with Greg Heym.
What
Occasionally,
else do you
Vince
need?
Rocco has me on because he needs a ratings bump. But you know,
Now pick up my buddy.
he's my guy too. I like Vince a lot.
Yeah, he's great.
All
I've
right,
known him a
so
long time.
spending good, hiring terrible. Fed cut as expected. Wall Street loved it. Dow and S&P 500 finished at record
Yeah,
levels,
say new records.
only up about 1% each.
Yeah, but still.
NASDAQ up by 2%. Tech stocks are just running wild. Like, you know, it's
Well, I think a lot of that is all the AI, right?
right. And you know, Wall Street doesn't seem to be so worried about the labor market data because that was so, you know,
Last
a
week?
couple weeks ago. Yeah.
It's just so last week.
You know, that 911,000 jobs that disappeared, who cares? Like that ended in March. Like what about, you know, the scary thing is what happens when we get the preliminary benchmark revisions for March 25 to March 26. Let's see how
Right.
bad this data is. That data from 24 to 25 was great data that was cut in half and it was still okay. You know, when you say you lost 911,000, that's not necessarily true. We revised the number downward because it wasn't accurate, but we still had decent job growth. We're adding about 75,000 jobs a month. But that doesn't sound as good as 150,000 jobs a month.
No.
So now we're averaging about 50,000 jobs a month, and you cut that in half, and it's not good.
It's pretty anemic
Right.
at that point.
But Wall Street is like, what me worry? Just what my good friend Alfred Newman would say over here. They're all about the future, and they're looking at profits and interest rates. That's what they care about. They're wealth managers here. That's what they would tell you to do. The rest of us are more worried about like our paycheck and, you know, what groceries cost and stuff like that. But it's good that they're happy. We don't like it when they're not happy.
No.
All right. So mortgage rates down, basically sitting at 6.25%. And a lot of you out there may be saying, well, I'm going to wait. You know, the Fed just cut rates. It's going to be below 6, 5.5 before you know it. Is that good advice, Lisa Rae?
No.
Why not?
Because you can't.
And I'll be grading your answer.
now I'm in trouble.
I know they're going to gang. Ray and Lena are going to gang up on me.
Okay, good. So they're going to be on my side.
Lena's got
No,
that
because
look. She's like, yeah. I'm gonna.
You discussed this already, you know, ad nauseum in how many different podcasts. It's not correlated. So if you're sitting waiting for a rate, either the house that you want is going to be gone or the prices could change. It's about the monthly payment. If you can make the monthly payment and you have found the property that you want, buy it. And
That's good. That's a good answer. Now I can improve on that, but only a little bit. No, it was an excellent, it was an outstanding answer. Look, you know, it's bad enough you potential home buyers out there want to time the market to get the best price. Now you want to get greedy and say, I want to time the rate too. Just remember what I said about a year ago. Rates were sitting at just over 6% in September of 24.
at 6.09,
Yeah.
right, I think?
The average conforming rate. Obviously,
Right.
there's different types of mortgage products. As Loan Daddy would say,
Yes.
he's celebrating the holiday with Shar. So for those of you celebrating Rosh Hashanah, please enjoy. But, you know, you have different options. If you have a relationship with a bank, you know, it's almost like an MSRP price. It doesn't mean everybody's going to pay the same amount. But you have to think about, like you said, if you find the house that's right for you, the one thing you can't change is the price you pay. That's
It's not going to adjust.
they're not going to come back 6 months later and go, here, take some more
Here's
money
a
back. We feel
discount.
bad.
Here's your coupon. See, retail. There's my retail. Here's your coupon.
Also, you know, nobody can guarantee that you'll get a chance to refinance right away.
Right.
Although the one thing that's happened now because rates have gotten lower is
Oh, a tremendous amount of
so
refinance.
refinancings now was last week it was tracked, which was a week and a half ago, I guess now. There were 60% of mortgage applications were
to
refis.
refinance, yeah.
Because people have been waiting that long to cash out and spend some money. You know, that's good. Think about buying another home. I'm just saying. But yeah, so what can happen if you wait is the rate could go back up like it did a year ago.
Right.
The homes, you know,
Are gone, right.
and inventory in most places has gone up significantly, although it's still at like what we would consider a neutral level. You know, where it's kind of like an even market, and you know things can sell quickly because there isn't this big disparity between buyers and sellers. But if that inventory gets absorbed because maybe you didn't jump in, but a lot of other people did, because there's a lot of people that have been waiting because they need a bigger house, they need to get rid of a bigger house, they're moving, their job is relocating, whatever reason, they're getting married, they're getting divorced, all the reasons people have to buy or sell are there, and these people are going to jump now. And that's going to absorb inventory. And that's going to mean that prices
I was going to say it's
start
going
to
to
go
create
up
a lot
again.
of competition for the inventory that's out there. So if you're sitting trying to time the rate, the competition might drive your price up, and now the house you want is gone anyway.
Yeah,
So the rate came down, and then you're back where you started.
Right, the rate's like,
because now the price of the house went up, and so the payment went up, and so now you're pricing yourself out.
and the key thing that Loan Daddy always says, look at the payment. Because at the end of the day, that's what the cost is. Right. Not necessarily the price of the house. It's a factor of the price of the house, the mortgage rate you get, the insurance, the property taxes, all that
things
stuff.
That you have to pay.
What is your payment going to be?
And can you make it? Is it a comfortable payment
even
for
a
you?
0.25% either way isn't necessarily going to make or break a deal, considering all those other factors. So if you buy with confidence because you've gotten all the information you need, talk to your agent, talk to your mortgage professional, talk to your attorney, make sure you understand the environment you're buying in, you're not going to be resentful about it. And if it's going to be your home,
especially long term,
you're
not even going to think about it.
I had a touching
anymore.
moment with my son when we dropped him off for college at University of Buffalo, where he was thanking us for his childhood. So I'm going to get emotional about this. I'm supposed to be laughing and making jokes, but
don't, because you make me emotional.
He really appreciated growing up in the same house, for his 18 years.
Right, it's nice. It's home.
And he loved the neighborhood. And I bought the house at the exact worst time to buy, right before the financial crisis, when prices were at their peak. But I don't regret it. My rate is less than half of what it was when I bought the house. And I love the house. Yeah. I think that, we joke about it all the time. When I bought, people at parties would go, you bought now. You're an idiot. I got my home for this much. Now you go to cocktail parties.
My rate.
Right now it's a rate. It's like, I got 3%. What did you get?
I'm at 3%.
6?
But again, and we've talked about this so many times, it's people like me who aren't going anywhere. Why would I? I'm sitting at 3%. Why would I trade for 6%?
Well, if you needed to, for one thing.
Right.
But you got to remember there are a lot of baby boomers out there with a lot of cash, right? But they don't want to pay off their mortgages. They like their 3% mortgage because that's cheap money in this world.
Yeah.
So I think, though, that the difference between now and last year is last year we had strong job growth.
Yeah.
So that was the concern about future inflation.
Well, we certainly thought we had strong job growth. The revisions make us rethink
that a little
remember,
bit. As we pointed out last week, the revisions are preliminary. They have not changed the data. So if you go to BLS's website and look, what's Greg talking about? Look at all these jobs.
It still has it all in there.
It doesn't become final until next year. As if no one will remember what we were revising or by how much. This is the fun part about economic data. And it's funny, people are going, it was always revised like this. What are you worried about? And you're like, no, these
and
are record
things always
revisions.
come down to personal levels anyway. If you're working and feel secure and know that you have the money behind you to make this purchase, are you worried necessarily if job growth isn't there? If you're not concerned about your own personal growth, like job, that you're going to have to worry, then you're making choices and decisions for yourself anyway. It's immaterial to
this is the biggest purchase
the economic data.
Most people will never make a purchase like this.
No.
And when you think of it, it's going to take me 30 years to pay for this. Like, how old am I going to be then? Like, what's going on? I think that's intimidating for sure.
Oh, absolutely.
But,
absolutely.
Talk to relatives, parents, whoever, that have been through this experience. And I think they'll calm you down a bit. And I know that, younger generations always say, how am I going to ever afford a house? How am I ever going to be able to buy a house? Well, a few Gen Zers out there like my son, you're buying houses earlier than my generation did because a lot of you can live wherever you want. You don't have to be in the office. You can do that.
Has changed the landscape of how people buy property
exactly.
also. And why people don't move or need to sometimes as much as they used to.
It's never been easy to buy a home. It's never been easy.
No, but I mean that the need for, your job relocated. So what do people have to do? They used to have to put the house on the market. So it creates the opportunity for somebody else.
Right.
But now, if your job goes across the country, but you can work remote, you don't even have to leave your house.
Right. You may have to get up earlier.
Right.
if you're going to the East
Coast. What I'm saying is that now that there are elements of the need to move that have been eliminated by remote work.
Yeah, no.
And that changes the inventory
my point
picture.
Is, stop complaining, youngsters out there, that it's too expensive to buy a home or they don't think it's worth the investment. You're young. You'll get more experience. You'll realize it. And there isn't a one-size-fits-all answer to any of this. When should I buy? What should I buy? Is renting better for me? You'll get to experience both.
Well, my first property was a co-op.
You get to experience free rent when you live at home, and then when you get your first apartment.
Well, Lucy would say, and we didn't live at home for free, so
All right. Yeah, Lucy says a lot of things. Hey, Lucy, you still watching? Hopefully.
Yes.
Yeah,
but like me, my first property was a co-op.
Yeah. Well, you're just buying something.
No, but I'm saying, right.
You just have plenty of people in the country and any of the foreign viewers and listeners going, what's a co-op? You're buying an apartment instead of a house. That's as far as we'll go into it.
Right.
They're not really in many parts of the country.
No.
It's a way to own a unit in an apartment building, like a condo, only with different rules. A lot more rules, especially here in Manhattan. There's a lot
well, I
more.
was Long Island, so for me the rules were not completely the same. But no, it was a way for me for entry into ownership versus renting.
No, and again, it's not when people ask me what's the best time to buy a home.
It's when it's right for you.
Well, there's two answers. Are you buying it for pure investment? Then you buy it when nobody's buying, because you'll get the cheapest price there.
Right.
But the correct answer, if they're buying it for themselves, is when you need or want one.
When you're ready. Right.
Because if you try to time it, you could be waiting for years, spending money on rent that you may not want to. But again,
it's when all the economics work out.
If your job moves around a lot and you have to move around with it, or you're expecting some major change in your life, then no, it's probably not the right time at that time to do it. As you get older, you don't want to take care of a house. I'm already, lazy enough to be like, oh man, I got to do this. I had to clean out the garage with new siding, new windows.
I'm having problems with my sprinkler system all of a sudden.
Wow. Don't worry, it's supposed to rain for like the next 5 days.
I know, I'm very excited about that because that's going to...
It's been dry lately.
I know, that's why I tried to run it and then I'm low water pressure, but we'll figure that out.
Okay, well, I'm sure you got people on this.
Well, I did. I had Lenny out at the house yesterday.
Okay.
Trying to help.
But you can't keep him away. I know.
No.
I know. His
Daddy's
baby girl
That's right.
calls. He says, Lucy, fire up the car. We're going there.
Well, he walked over. But
I was going to say, I wasn't going to point out that you live right a couple blocks from your folks.
Yes.
So that's good. They bring you stuff.
Yes, or they come help.
That is good to have.
Yes, we're blessed. Very blessed.
Yes, you are. They're very nice people, but you didn't come to my gig last week, so make sure you're there at the next one, okay? No excuses this time. Okay. I'll have the bus pick you guys up.
Okay.
So you're there.
Well, we are a group.
I know. You're a group, all right. Let me tell you. I get lectured by Lucy before, telling me what to do, and But
we come in, en masse. 6, 7, 8 of us sometimes.
It's like a pack of Castrignos just fall into place. Yeah, no, it's good. You got to bring in people.
That's how Italians roll. We don't, we come with,
you don't realize.
We come with the whole posse.
Until you start gigging, you don't realize that the restaurant owner is looking for you to bring people. They don't necessarily care what music you play. If the restaurant is full, they're happy.
Yeah.
You could be the Beatles. If there's nobody in there, you're fired. That's unfortunately the way this goes.
Yes. Well.
But all the restaurants I play at are just wonderful places. And we had a good gig at Bel Posto on Friday.
Yeah, it's a very cute place. We like it there.
Yeah, but I have this week off.
Oh, my God. What are you going to do?
Go to bed early, probably. Okay. I don't know what I'm going to do. Get caught up on whatever I wasn't watching or, speak to my wife. The whole empty nester thing is coming in. Is starting to come into place now, and I think we're comfortable with it.
Well, it takes a little getting used to.
You have to go back to 18 years to remember what it was like when it was just the two of you. But all right, so I think that's the show for this week.
Okay.
It was good to have you back on. Did you
Thank
enjoy
you.
it?
Of course.
Will Lucy and Lenny enjoy it?
Of
I got hit now.
course.
Remember, send email to ctl@bhsusa.com. I want to see an email from you, Lucy, just so I know that you watched, because
Well,
there will be a quiz.
She sends me the email.
I'll forward it to me.
Tells me, that I'm beautiful as always, and what a great show.
And that stiff you're working with ain't getting it done. You should have the show. Well, it's...
No, she's just a typical mom.
If they give me a show, they'll probably give
who tells her
anybody a show.
daughter, good things. So, thank you, mommy.
Thanks. And thanks for being on the show. Thanks to Ray and Lena.
Yeah.
It's always, they make it easy to come in here on a Monday morning,
Yes.
all upset about the Jets.
They make it great.
Well,
They make it
yes,
great.
we give us that energy to get going through this. And, we'll have the PCE data, which will give us the final word on spending and inflation.
Lots to talk about next week.
We'll see. And we'll have Loan Daddy and Shar Sedgh as well. I'm getting better at saying his name fast. It's actually easier to say Shar Sedgh than Shar Sedgh. It just, the tongue doesn't
Well,
want
it
to.
depends on how it rolls off the tongue.
That's why I just call him Sarge now. And he doesn't like it, but that's okay. It's my show. All right, everybody. Thanks again for all your support, and we look forward to crossing the line with you again next week.